You know, I didn't always win 8 out of 10 trades. For years, the market chewed me up and spat me out. I thought I was smarter than the tape, smarter than the crowd, and smarter than the price itself. But the market doesn't care what you think, it only cares what it does. And that's what today's talk is all about, how I finally started winning 8 out of 10 trades. If you watched the previous video on the rule that helps you catch big moves, then you'll understand why this next step matters so much. Because catching the big swing is one thing, knowing how to trade with discipline inside those swings is another. When I was a young trader, I wanted action. I'd jump in and out of trades just to feel alive. Every little movement on the ticker looked like an opportunity. But let me ask you something. Have you ever noticed how the urge to do something in the market often leads to doing the wrong thing? That's what it did to me. I was busy, but I wasn't productive. I was trading noise instead of structure. Winning 8 out of 10 trades didn't come from being right more often. It came from being wrong the right way. When I took a loss, I took it quick. No arguments, no prayer, no hope. Just out. Because hope is the most expensive thing a trader can buy. I remember one stretch when I couldn't win to save my life. Every chart looked like a riddle. I'd enter at the wrong time, get shaken out, and watch the stock move in my favor only after I'd quit it. You ever had that happen? It's maddening. It makes you question everything. Your tools, your timing, your instincts. But that's when I learned the market isn't testing your method, it's testing your mind. The turning point came when I stopped fighting the market and started listening to it. You see, prices talk. They whisper before they shout. Every chart tells a story: accumulation, distribution, strength, weakness. And if you learn to read that story, you can see which side is winning long before the crowd catches on. That's when trading stopped being guesswork and started being interpretation. And interpretation, my friend, is everything. You can give 2 traders the same chart and one will see opportunity while the other sees danger. Why? Because one's focused on emotion and the other's focused on structure. I trained myself to see structure. Trend lines, volume confirmation, price behavior around key levels. All these became my language. But don't mistake patience for paralysis. When the market gives you the right signal, you've got to act without hesitation. I've said it before, the big money is made in the waiting, but it's kept by acting when the time comes. So I waited for setups that were so clear they almost hit me in the face. I didn't need 100 signals a week, just a few solid ones. And when I found them, I pressed them. That's another reason I started winning 8 out of 10. When I was right, I stayed right. I pyramided into strength. I let profits grow until the market itself told me it was over. You ever notice how hard it is to just sit tight on a winning trade? The human mind wants to snatch the gain before it disappears. But in trading, impatience kills more accounts than bad entries ever could. Now, you might be thinking, Jesse, how do you know when the market's about to turn? And the truth is, you don't know, you recognize. The tape starts to change its character. The same setups that used to run start to stall. Volume dries up where it should expand. It's like listening to music. Once you've heard enough of the melody, you can tell when the rhythm is off. That's when I tighten my stops, reduce position size, and prepare to shift sides. Remember in that previous video, the one on the rule that helps you catch big moves, I told you how you must ride with the trend until it breaks its own back. Well, what I'm telling you now is how to live inside that move without losing your nerve. The big swings come to those who can hold, but the real professionals know when to reload and when to retreat. That's what separates a lucky streak from consistent success. I also stopped measuring my progress in dollars. Strange, isn't it? But once I focused on execution instead of results, the money took care of itself. My job wasn't to make money. It was to make good trades. The market pays you for correct behavior, not for wanting profit. And every bad habit, averaging down, revenge trading, holding losers, was just a tax I paid to learn that truth. I began treating every trade like a business venture. Would you invest in a store that loses money every week but keeps promising to turn around next month? Of course not. Yet that's exactly how most traders treat their losing positions. They hope instead of act. The moment I started treating losses as part of the business, expenses, not failures, I found peace in the numbers, and peace breeds clarity. You see, winning 8 out of 10 trades isn't about some magical formula. It's about stacking probabilities in your favor. Every little thing, trend alignment, volume confirmation, entry timing, risk control, adds a grain of probability. You pile enough grains, and the odds start leaning your way. But break discipline even once, and the whole pile collapses. That's why consistency is more important than brilliance. And let me tell you something else, trading success doesn't just build wealth, it builds character. You learn patience because the market forces it on you. You learn humility because pride costs money. You learn courage because opportunity doesn't wait for perfect comfort. The market teaches you how to think like a capitalist. Risk first, reward second. And once you think that way, you stop gambling and start trading. Every great trader I've ever known had one thing in common: they respected the market's authority. They didn't try to predict, they tried to understand. Because once you understand what the crowd is doing, you can stand apart from it. You don't follow tips, you don't chase headlines, and you certainly don't argue with price. Price is law, and law doesn't bend for opinion. Now, if you really want to start winning 8 out of 10 trades, start by mastering yourself. The chart doesn't beat you, your impulses do. Control those, and the rest will follow. Each time I followed my plan instead of my feelings, I won. Each time I ignored it, I paid tuition to the market. You ever notice how expensive those lessons get when you think you've got it all figured out? The market has a way of humbling every ego that walks in unguarded. So, I learned to wait for the right conditions, strike with conviction, and exit without regret. And when you do that long enough, you realize trading isn't about predicting tomorrow. It's about surviving today with your capital and confidence intact. Because survival is what gives you another chance to catch the next big move. Execution quality matters more than trade quantity. That's a truth most traders learn only after years of hard lessons. I used to think that the more trades I took, the more chances I had to make money. But the market doesn't reward activity, it rewards accuracy. You can take 100 trades a week and still end up poorer if you execute them carelessly. On the other hand, one well-executed trade can make up for an entire month of noise and frustration. Let me tell you something I learned watching the tape day after day. The difference between a losing trader and a consistently profitable one isn't the number of trades. It's the precision of each one. The market gives you a few good chances every so often, but most traders miss them because they're too busy chasing every flicker of movement. You ever find yourself taking trades just because you haven't made one in a while? That's not trading. That's boredom pretending to be opportunity. Execution starts long before you hit the buy or sell button. It begins with preparation, studying the charts, identifying the trend, marking your levels, and knowing exactly where you'll enter and where you'll get out. When you have that plan, you're no longer reacting to the market, you're responding to it. And there's a world of difference between those two. Reaction is emotional, response is strategic. A good execution is clean, quiet, and deliberate. There's no rush, no panic. You wait for your setup like a hunter waits for the right shot. You don't fire at shadows, you fire at targets. The moment you start trading impulsively, you give up your edge. And once you lose your edge, every trade becomes a coin toss. I remember the times when I'd placed 10 or 15 trades a day, convinced that constant movement meant I was improving. But when I reviewed my trades, I saw the same pattern: small wins, large losses, and no consistency. I wasn't executing a plan, I was executing my patience. And the market charged me a fee for every impatient click. That's when it hit me: trading is not a game of frequency. It's a game of precision. Let me ask you something. Would you rather take one clean, well-timed shot and hit your target, or fire 100 bullets into the dark and hope one lands? Most traders do the latter. They shoot first and think later. But every time you enter a trade without a clear reason, you're adding noise to your own performance record. How can you refine a system if you don't even know why you entered? Execution quality is about alignment. Your plan, your signal, and your discipline all pointing in the same direction. When one of those is off, the whole structure collapses. For me, that meant waiting for confirmation from price and volume, not from my emotions. I'd rather miss a trade than enter one that doesn't fit my setup perfectly. Missing a trade costs you nothing. A bad trade costs you both money and confidence. Confidence is built through repetition of good behavior. Every time you execute your plan correctly, even if the trade loses, you strengthen your discipline. That's the kind of win that doesn't show up on the chart but compounds in your psychology. And in trading, psychology is half the battle. The truth is, execution isn't glamorous. It's slow, methodical, almost boring. You place your stops before the trade, you set your targets, and then you follow through without hesitation or interference. You don't move your stop because you feel like it. You don't exit early because you fear the profit might vanish. Execution quality means trusting your process more than your nerves. Do you know what separates the pros from the amateurs? It's not intelligence or special information. It's consistency of execution. A professional trader can lose on several trades in a row and still come out ahead because every trade is executed the same way. The process doesn't change with emotion. Amateurs, on the other hand, change their plan every time the market shakes them. They treat each loss as a personal failure, not as part of the system's probabilities. When you start focusing on execution, you stop counting trades and start evaluating behavior. You begin asking, did I follow my plan? Instead of, did I make money? Because when you execute with precision, money becomes a byproduct of discipline. The market starts to reward you not for how often you act, but for how well you act. There were times when I would go days without placing a single trade. Some might call that hesitation, but I called it preparation. I waited until the odds were clear, until the chart spoke the same language as my rules, and when I finally acted, it felt effortless. That's what good execution feels like. Calm, confident, and almost anticlimactic. You see, trading too often dulls your senses. It makes you less selective, less aware of subtle market changes. But when you focus on execution quality, your mind sharpens. You start noticing things you used to ignore, volume anomalies, failed breakouts, hesitation candles. Those small details become your signals. They tell you when to step in and when to stay out. And here's another thing: good execution protects your capital. Every sloppy entry or delayed exit chips away at your account. But when you execute cleanly, your risk stays contained. You control the downside before chasing the upside. That's how professionals survive losing streaks. They don't bleed out from carelessness. Execution also builds trust with yourself. When you know that you can follow your own plan, you eliminate the biggest enemy in trading, self-doubt. You stop second-guessing, stop tweaking every little rule, and start trading with clarity. And clarity is rare in this business. Most traders drown in confusion because they mix too many ideas without mastering any. But once you master execution, everything else starts to align naturally. When I started executing fewer trades but doing them right, my results transformed. The chart didn't change, I did. My analysis was the same, my strategy was the same, but my focus shifted from how many trades can I take to how perfectly can I take the next one. And that shift changed everything about how I saw the market. Because in the end, it's not about how many times you swing, it's about how well you connect when you do. Every trade is a chance to prove your discipline, not your ego. The market doesn't pay for effort, it pays for precision. Trade structure, not emotion. Charts don't care how you feel. That single idea took me years to truly understand. In the beginning, I traded with my nerves, not my knowledge. I'd get excited when the market moved in my favor and terrified when it moved against me. Every tick on the tape felt personal, like the market was either rewarding or punishing me. But the truth is, the market doesn't even know you exist. It doesn't care about your hopes, your fears, or your opinions. It only moves according to supply and demand, strength and weakness, accumulation and distribution. Once you start trading based on structure instead of emotion, Everything about your performance begins to change. I used to look at a chart and see what I wanted to see. I'd convince myself that a small uptick meant a reversal or that a sudden drop was just a shakeout. You ever done that? You start interpreting data through the lens of your position. That's not analysis. That's emotional bias disguised as logic. I learned the hard way that the market punishes traders who trade from hope. Hope is not a strategy, it's a liability. Structure, on the other hand, is objective. It's the framework that tells you what's actually happening, not what you wish were happening. Structure is found in trends, levels, volume patterns, and price behavior. When you trade based on structure, you're following the footprints of smart money, the big players who actually move the market. They leave clues on the chart, and if you learn to read those clues without emotional interference, you start trading on probability instead of impulse. You see, emotions are the enemy of timing. They make you buy too late and sell too early. Fear keeps you from entering good trades, greed keeps you from exiting bad ones. The moment you allow emotion into your decision-making, you lose your edge. That's why I began forcing myself to see charts in terms of what the price is doing, not what I feel it should do. The market doesn't reward feelings. It rewards observation and execution. Think about it like this: a pilot doesn't fly a plane based on how the sky feels. He flies based on instruments, structure, and training. If he starts relying on his emotions in the middle of turbulence, he crashes. Trading is no different. The chart is your instrument panel. The structure, trend, support, resistance, volume is your navigation system. Your job is to read it clearly, even when everything inside you screams to do the opposite. When I started paying attention to structure, I began noticing patterns I'd never seen before. How price consolidates before a breakout. How volume expands when real money enters a move. How a failed rally near resistance often precedes a sharp drop. These weren't coincidences. They were the rhythm of the market revealing itself. And once I trusted that rhythm more than my gut feelings, my trading stabilized. I wasn't reacting to every flicker on the tape anymore. I was waiting for structure to confirm my idea. Let me ask you something. How many times have you exited a trade early, only to watch it move exactly as you expected after you got out? That's emotion overriding structure. Your mind saw the setup, but your nerves refused to trust it. I did that countless times. I'd see the perfect breakout form, but the moment it dipped a few ticks, I'd panic and sell. Then the market would explode upward without me. It wasn't the market's fault. It was mine. I was trading my fear, not the chart. Structure gives you something emotions can't: consistency. When you follow structure, you operate on a set of rules, not reactions. You don't need to guess, you just need to observe and act accordingly. For me, that meant defining my levels before the trade, entry, stop, target, and never changing them once the trade was live. Because the moment you move a stop out of fear or greed, you're no longer following structure, you're following emotion. Emotion will whisper lies in your ear. It will tell you, just hold a little longer, it might bounce. Or take profits now before it disappears. Structure tells the truth. It tells you when the trend is healthy and when it's breaking down. It gives you signals that are based on behavior, not on belief. The key is learning to trust those signals more than your own impulses. When I began training myself to see structure, I'd spend hours studying historical charts. I'd trace patterns, mark levels, and ask myself, what was the market telling me here? Over time, I started noticing how the same setups repeated across different instruments and time frames. That's when I realized structure doesn't lie. It's universal. Human behavior changes, but the market's structural patterns remain the same because they're built on psychology. Fear and greed don't change, but structure helps you see them before they explode on the screen. Trading with emotion feels thrilling, but it's chaos disguised as excitement. Trading with structure feels boring, but it's precision disguised as control. The boredom comes from discipline, and discipline is what pays. Every professional trader I've known has said the same thing: trading gets easier when you stop trying to feel smart and start trying to stay systematic. The goal isn't to be right, It's to be structured. You ever notice how the best trades feel uncomfortable when you take them? That's because they often go against what your emotions want to do. Emotions tell you to buy when the market feels safe and to sell when it feels dangerous. But structure tells you to buy when risk is lowest and sell when risk is highest, which is usually when your emotions disagree. Learning to act in alignment with structure instead of comfort is one of the hardest things a trader will ever do. Once I internalized that, I stopped looking for certainty. I started looking for setups. Structure gave me the confidence to accept losses as part of the process. I knew that if I followed my plan and traded based on clear structure, the odds would work in my favor over time. Emotion might win a few battles, but structure wins the war. Every candle, every swing, every consolidation. It all tells a story. The question is, are you reading that story, or are you rewriting it in your head to fit your feelings? That's the trap. Most traders don't lose because they can't analyze, they lose because they can't detect. Price action reveals truth long before opinions do. That's something I had to learn by watching the tape for years, staring at charts until they burned into my mind. You see, opinions are easy to form. They come from headlines, from analysts, from what other traders are saying, but price doesn't talk in words. It speaks in movement, in rhythm, in reaction. The tape is honest. It tells you what people are actually doing with their money, not what they say they're doing. That's the difference between talk and truth. When I was still chasing tips, I'd follow every rumor that promised a quick move. Some insider story, some sure thing. I'd buy the stock because someone sounded confident, but the chart would tell me otherwise. Volume would dry up, momentum would fade, and I'd hold on because of that opinion I heard. You ever do that? Trust someone else's conviction more than your own observation? Every time I did, I paid for it, because the market doesn't run on opinions, it runs on transactions, and transactions show up in price. Price action is the purest form of market truth. No filters, no forecasts, no emotional spin. Just the collective behavior of everyone buying and selling. That's why I stopped reading too many reports and started reading charts instead, because by the time an opinion becomes popular enough to make headlines, the move is already halfway done. Price told the story days, or even weeks before anyone bothered to write about it. I used to think I needed to understand every news event, every earnings report, every analyst comment. But over time, I realized that all of that information was already reflected in the price. The smart money acts before the news breaks. Their footprints are there in the volume spikes, the tight consolidations, the quiet accumulation phases. If you learn to recognize those patterns, you start seeing the truth unfold in real time, not in hindsight. Let me ask you something. How many times have you seen a stock fall sharply after good news, or rise quietly before an announcement? That's price exposing opinion for what it is: noise. The crowd chases stories, but professionals follow price. When you align yourself with price action, you're aligning yourself with the real flow of money, and that's the only opinion that matters. I remember a trade years ago when everyone was bullish on a certain stock. Every headline screamed about its potential. I watched it climb fast, but something about the price action bothered me. The volume was weak, and the rallies were short-lived. The tape was telling me that real buyers weren't showing up. The price was rising, but the foundation was hollow. I stayed out while others rushed in. A few days later, the stock collapsed. That was the moment I realized that opinions may sound convincing, but the tape never lies. Price action is a mirror. It reflects the truth of supply and demand. If demand outweighs supply, price rises. If supply outweighs demand, price falls. It's that simple, and yet most traders overcomplicate it by adding emotion, bias, and external noise. They trade their beliefs instead of the behavior they see. The only belief worth holding in trading is that price knows more than you do. You can feel it in the tape when something's changing. The market starts to behave differently. Momentum slows, volatility increases, candles stretch wider, volume starts to pulse in strange ways. That's the early whisper of truth. You don't need to understand why yet. You just need to recognize that it's happening. The explanation always comes later, after the move has already occurred. That's why the best traders trust price action above everything else. When you start paying attention to the raw movement of price, you begin to notice how it reacts at certain levels. Support isn't just a line, it's a zone where buying pressure overpowers selling. Resistance isn't just a ceiling, it's a wall built by traders who want out. These reactions reveal intent. They tell you what the crowd is thinking through their actions, not their words. And that's the key. Trading is about behavior, not belief. Markets are made of human emotions. Fear, greed, uncertainty. But those emotions are visible in the chart. When fear dominates, candles stretch downward violently. When greed dominates, rallies push far beyond logic. Price doesn't need to explain itself. It just moves, and your job is to interpret that movement with a clear mind. You ever watch a breakout that looks perfect on the surface but feels off? Maybe the volume doesn't confirm, or maybe the price hesitates right after breaking the level. That hesitation is truth revealing itself. The crowd sees a breakout, the tape shows exhaustion. Those moments taught me to trust what the chart says more than what I want to believe. The beauty of price action is that it removes emotion from the equation if you let it. You don't need to guess. You don't need to predict. You just need to observe. The chart gives you signals every day: trend direction, momentum, strength, exhaustion signs. Your only job is to listen and respond. When I talk about truth in price, I'm not being poetic. I mean that literally. The market tells you everything if you know how to read it. Every large player leaves fingerprints. Every shift in sentiment shows itself in the candles. If a stock can't hold its gains despite bullish news, that's truth. If it refuses to drop even after bad headlines, that's truth too. Opinions fade, but price endures. Once I accepted that, my trading simplified. I stopped asking, what do others think? And started asking, what is price doing right now? That one shift changed everything. Because price isn't biased. It doesn't flatter you. It doesn't argue. It simply is. And once you align your trading decisions with that objective reality, you stop being surprised by market moves. You can almost feel when the tape starts to tighten, when accumulation begins, when distribution takes over. Those are the invisible hands shaping the future trend, and they always appear before the news catches up. That's the edge that comes from trusting price over opinion. Most traders fail because they keep looking for confirmation from others. They want someone to agree with their trade before they act. But by the time consensus forms, the opportunity is gone. The crowd follows comfort. The professional follows price. And price, my friend, doesn't wait for comfort. It reveals the truth before anyone's ready to believe it. Consistency builds wealth. Impulse destroys it. Those 6 words sum up more about trading success than 100 technical books combined. When I first stepped into the market, I thought trading was about brilliance, catching that one big move, making that one perfect call. But the longer I stayed in the game, the clearer it became. It wasn't brilliance that made fortunes, it was consistency. The traders who lasted, the ones who built real wealth, weren't the ones with the flashiest trades. They were the ones who did the same right things, over and over again, without letting emotion break their rhythm. In the beginning, I'd jump from one idea to another, chasing every opportunity that looked exciting. One day I was a breakout trader, the next I was buying dips, then I'd try scalping, then swing trading. I called it being adaptable, but it was really just inconsistency disguised as flexibility. You ever catch yourself doing that? Switching strategies every time something doesn't work right away? That's how most traders stay stuck. They never give one method enough time to prove itself. Consistency isn't glamorous. It's not the kind of thing that makes your pulse race or fills your day with constant excitement. But that's the beauty of it. It's predictable, controlled, and repeatable. Every successful trader I've known treated trading like a business, not a casino. You don't walk into a business and change the entire model every week because one day's sales were bad. You adjust gradually, based on data, not emotion. That's what consistency really means, acting on structure instead of impulse. Impulse trading is the opposite. It's driven by emotion, greed, fear, boredom, revenge. You see a sudden move, You feel left out, you jump in without a plan. Maybe it works once or twice, and you start to think you've found something. But it never lasts, because impulse has no foundation. It's like building a house on sand. The moment the market shifts, the entire structure collapses. When I finally understood this, I stopped asking myself, how much can I make this week? And started asking, can I execute my plan flawlessly this week? That's when everything started to change. The profits came slower, but they stayed. The losses became smaller, more manageable. I wasn't chasing the next big trade anymore. I was building a process that could last a lifetime. Let me ask you something. Would you rather make a quick 1,000 today and lose 2,000 tomorrow, or make a steady 100 every day for months? Most traders say they want consistency, but their behavior says otherwise. They get bored when the market's slow, they force trades to feel productive, and they let small mistakes pile up into large losses. Wealth isn't built from excitement, it's built from repetition. Consistency means showing up every day with the same mindset, the same preparation, and the same respect for risk.